Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going into our Shield Portfolio weekly numbers. This is week 59. The date is September 5th, 2025. This is filmed on Friday. I'm going to be gone for the weekend, so I'm doing this on Friday. I'll have the video posted on Saturday. But as usual, this is our weekly numbers for week 59. So, going over our Shield strategy for our Weapons of Finance portfolios. This is our primary portfolio. This is our defensive strategy, focusing on preserving and protecting wealth, continuous and stable returns, utilizing balanced diversification for global economic resilience, and using dynamic management. So this is our current portfolio's net worth, which is $755.72. We have a market gain of $82.59 with a return of positive 22.56%. So this is our 59-week return right here. This big bump over 20% is mainly because of gold just pumping hard this week. So we're going to go over that. So here's our portfolio weekly data for week 59, so the past week. We have a market gain of $16.16 with a positive money weighted return of 2.19%. So anything over 2% 1 week is really good. It means the market's really moving in our favor. Our portfolio monthly data for week 59, so the past 30 days. We have a total gain of $27.20. That's our market gain plus dividends. And we have a money weighted return of positive 3.84%. So this is our week 59 monthly data. And now we have our week 59 quarterly data, so the past 90 days. We have a total gain of $39.85, which is our market gain and dividend put together. And we have a money weighted return of positive 6.13%. So this is our 90-day performance for the past 90 days for week 59. Then we have our yearly data for week 59. We have a total gain of $81.96, which is our market gain and dividends put together. And we have a money weighted return of positive 20.31%. Now this is an insanely high number for this portfolio. This should not be this high. Normally I say operationally we want to be 5 to 10%, right? That's standard performance. Optimal performance is over 10%. But over 20%, that's crazy. Like I said, gold, which is the majority of our portfolio still, is just outperforming right now. You're going to see on the chart, it's a huge spike. But I mean, over 10% I'm happy, but over 20% I'm fearful. Like that's such a big jump. Like there's going to be a turnaround. Like probably next week, there's going to be a turnaround, guaranteed. This portfolio is not designed to sustain that high of a yearly return. I focus on the yearly return. Like I said, 5 to 10 operationally, above 10% optimally, but above 20% is just stupendous returns. Like it's too high. It's too high. It's going to change. Don't worry. Then we have our all-time, which is from portfolio inception back on July 19th, 2024. Our total gain is $82.59 with a money weighted return of positive 22.56%, which of course will match our net worth portfolio right here. So that is our portfolio data. Now we have our percentage charts. So on the right, we have our allocations. So gold still at 45% with our GLD ETF. Bonds at 15% with our GOVI ETF. Commodities at 15% with our USCI ETF. Stocks at 10% with our RSP ETF. US dollar at 10% with our UUP ETF. And Bitcoin at 5% with our IBIT ETF. Now this, like I said, this is the weekly return. Look at gold. Right, just to pause on gold for a second. Positive 4.08% in 1 week. That's way too much for gold to move in a week. It's way too much. That's an insane move for gold. Bitcoin down here at 3.23. That's fucking peanuts. That's normal for Bitcoin. Bitcoin's really volatile. Gold is not this volatile, right? So, like I said, a big chunk of our money is in gold, and gold has outperformed this week by a huge margin. So that's why our portfolio is really high right now. Like I said, it's not going to last. There will definitely be a sell-off in gold, I guarantee. So that's our weekly percentages. Then we have our monthly percentages for week 59. You could pause the video, see right here, all the numbers. We have our quarterly percentages for week 59, so all in the green, very good. Just the past 90 days, doing good. We have our yearly percentages, which of course, gold over 40% in 1 year, 42.18%. Again, really, really high performance for gold. Really high performance for gold. And then our all-time performance gold's almost hitting 50% return since the portfolio inception. It's crazy. Gold is like catching up to Bitcoin, which is really crazy. But that's our percentages. Then we have our position changes, which still since April 30th, I have not changed anything. I have remained dominant in gold just because I've been concerned over a long time. This market is just too unpredictable. And Trump and his tariffs are a big reason for that. Inflation's a big reason for that. The Fed having high rates is a big reason for that. The inflation we've had since the pandemic is a reason for that. So there's many reasons, but I've just been trying to play it safe in gold. Again, this is our shield strategy, not the sword, which is the offensive, the more wild one, which we cover in my other video. This is the shield being defensive, so gold's a big player in this one. We have no portfolio transactions this week. Then we have our Illuvium staking dashboard here, separate from our shield portfolio. This is the current price at $14.05 for ILV, for the ILV token. We currently have staked 27.09 ILV for a current market value of $380.57. We have our vesting. So we have 2 vestings unlocked already. So it's been over a year, right? And I do once a month. So we're two unlocks in. Then the next one's going to unlock in 19 days. We have our vesting for page 2 and page 3. So the most recent vest was on August 29th, 2025. And we deposited 2.79 ILV and staked it for 365 days. So we have 357 days left to unlock. And then our revenue distribution, surprise, surprise, we have no new revenue distribution, just the original revenue distributions that we've claimed. The whole crypto industry, of course, has taken a shit. There are no Illuvium transactions this week. So that is our weekly numbers. So now we get into our charts, and you could clearly see what I'm talking about on gold. This is our GLD ETF. Just look at this phenomenal fucking spike that's happening right here. Phenomenal spike right here, just far above this red line. It was tapping this red line multiple times. Like, it first broke out above this trend. I highlights every week, and the 2 or 3 people that watch these videos, I'm sure, are sick of seeing this, but since October 2023, gold's been up and to the right, the solid trend. Broke out post Trump's 90-day pause on tariffs. Broke out huge, kind of like this breakout right here is huge. Then it hit this red line, or I should say, it popped here and then came down. Then it popped here and it came down. So I drew this line, then it popped. So I tapped it about 5 times. And then off of the, just this week, bounced off this upper trend and shot up higher. So it's still staying above this already ascending trend channel. Right, so gold is just being a fucking monster right now. And I think, wrong one. I think it's around, or just about 3,600, just barely under. So 35.86, it tapped 3,600, I know that. But it's at 35.86, so it's right around that 3,600 mark, which is crazy. Gold is just being a fucking monster right now. We have commodities. So on a 5-year, show this on this yellow arrow. This is since the beginning of the COVID pandemic, going back to April of 2020. Just been up and to the right for commodities because inflation. Shocker. We have the 2 trends. On the lower trend, it was going for a while, then it broke out, and now it has been in this upper trend, and now it's kind of breaking out still of the upper trend. So there's the trend, there's the upper trend, and now there's this upper trend that's happening, where it's still above it. I thought this wasn't going to be sustainable, but it just keeps going. But it makes sense with inflation going up, gold's going up, commodities going up. You know, those things kind of move up together. So commodities still been good. That's why we have 15%. Bonds, sharp sharp spike that just happened recently. Very interesting. Again, since the COVID pandemic started, April 20th, it's been down and to the right. So unlike commodities that are up and to the right, like that, bonds are down and to the right. So bonds are sold off. Pretty much hit this bottom though in October 23, and it's been slowly consolidating at the slow trend, but just very recently though. Look at this big spike up right here. This is quite interesting. I can't even say why this is happening. I think it's just uncertainty in the market. So we're just seeing this big uptrend in bonds. But it does correlate, interestingly enough, with the US 10-year yield almost at 4%. So we have this trend going on the 10-year yield, going back again pretty much around the beginning of the pandemic in June 2020. Just been consolidating upwards. Hit this peak in October 2023. A lot of shit happened in October 2023. Gold, commodities, everything. And then it came down, hit the peak, came down, hit the peak, came down, hit the peak, and it's been trailing down again. I think if it breaks below 4%, it's going to get kind of interesting. But we'll see what happens with that. But bonds just shooting up. US dollar still not looking good, still down. Still losing the portfolio. It looks like it kind of bottomed here around July of 2025. And it's been kind of steadily creep up, but not too much. So US dollar still a poor trade. Stocks doing good. This is our equal weight stock index, the RSP. So we're above our previous all-time high back here in November of 2024. If you compare that with the S&P 500, we're still pretty good in this uptrend. We fell off a lot, and then we brought it back up. I put this blue line here as the previous peak before the crash of February 2025, so big sell-off. So I still keep stocks at 10% just because this volatility right now, I'm concerned. Bitcoin, ever since it hit that 120K, it's been kind of selling off. So our IB ATF right here. So at 110. So we hit this 120. It's kind of come down. It's bounced around this pretty much almost decade-long trend line. Every time there's been a peak, it's hit it and it's broken off. So 2017, twice in 2021, 2024, and 2025, it broke out, hit this 120, just came down. So we're watching Bitcoin to kind of see what happens, but we keep it at 5% because of just how volatile it is. But I don't know if it's going to be able to maintain this breakout above 120. I think it's this decade-long trend line. I think it's going to stop it. But that's our weekly update for the Shield portfolio. Gold by far an outstanding performer in the portfolio. Just look at this trend. This is crazy right now. Gold's just on a tear right now. Gold is not a volatile asset, so to see it be volatile like this is just very interesting. But anyway, that is our update for the week. So I hope you enjoyed. If you have any questions, comments, or criticisms, let me know. And have a good day.